This is going to be effective in 2024. Buckle up. If you lie on the BOI, it is non-compliance, $500 a day penalty, and jail time.
Hey, during COVID, I set up a side hustle that I don't use anymore. You still got to file.
Yeah. One sheet of paper is not an entity that's going to protect you in court or a lawsuit or an insurance claim. I hate to tell you that.
If you're a big business, don't worry about this. Hey, small business owners, you got to file this. You're like, guys, I don't want to deal with this BS. Let me just run my business, go back to doing my thing and make money. We got you.
Welcome, everybody, to the Main Street Business Podcast. My name is Mark Kohler. I'm here with the infamous Matt Sorensen. Last week, we were just live on stage doing our show from the Alt Asset Summit. And now we're here back in the studio. It's a lot more relaxed.
Yeah, we're back.
No live audience.
Yeah, we're back in the studio, and today we have like a warning for you. Last week was fun about investing and growing and building your wealth. This week it's about the federal government wants to know about your LLCs and corporations, and if you don't tell them about it and file this thing we're going to talk about, the BOI, you could go to jail.
Yeah, it's the penalties are off the chart. And we'd like to say, oh, well, they wouldn't really do that. Or, yeah, there'll be a way to get out of the penalties. You know what? There might initially be for a few weeks or a month or a 30-day grace period and this and that. There's always grace periods when a new law is brought into effect. But people, this is here to stay. It's been challenged in court. It's legit. It's a bipartisan bill. We're going to cover all this. But the Business Owner Information Report is critical for you to understand. Now, here's what we're going to do today. We want to talk about the BOI. What is it? Why is it here? Why is this a blessing in disguise? Give us a shot at helping you get the right mindset on this. Do you even need to comply? There are a few exemptions for certain companies. And then how do you comply? We're going to hit it hard, we're going to hit it fast, and we're going to freaking give you all the answers to your questions.
Yeah. Now, you did say there's been some cases on this. There have been some people that have won. And this BOI, this law, Corporate Transparency Act, was ruled unconstitutional in federal district court, but only for the plaintiffs in that case, and it's working its way through the court system. So right now, even that court order, there's been a couple of these cases have said, if you're not a plaintiff in this case, you still got to file. And FinCEN is out there, the federal government is saying, you still need to go comply with this. So that's been our message as lawyers. Unless you're one of those people that was a plaintiff in that case, you've got to comply with this. I don't love the law. Mark's going to give you some reasons why he likes it.
Yeah.
But the reality is, I don't like my taxes either, but I got to file a return and send money to the IRS every year too. It's kind of one of those things. We're here to help you make sure you get it done and stay compliant.
Yeah, you could hate the player, but you got to know what the game is and what the rules are. Now, let's talk about just
you
what.
You kind of flipped that one.
I don't know
that, but it worked.
Yeah, it did work.
It worked.
All right, now let's just talk about what it is. So some of you are like, "What the hell are you guys even talking about?" So the BOI is a report that can be filed online. In fact, it's the only way to file it online with FinCEN, which is the Financial Crimes Enforcement Network, which is a sister to the IRS, for lack of a better analogy. And they are enforcing a law, the Corporate Transparency Act, that was passed literally 3 years ago and said this is going to be effective in 2024. Buckle up. No one listened, cared until now. And what the report, and I'm going to give my version of this, and then you tell me what it is as well. So sometimes we both say it in different ways, but it resonates with our listeners here in a different way. But this law was passed that we need to file this report to let the government know who controls your entity, who owns it. We're talking about LLCs or corporations. The close to 50 million entities filed in this country at the different state secretaries of state, who owns it and controls it, which will only be private, which will be private with the federal government, and it is not public record. And they're doing this. We'll get to the why, but you have to file this report and tell them who owns it and who controls it and your address, blah, blah, blah. That's what it is. How would you describe what it is?
Yeah, that's what it's a federal report. A lot of people are familiar with your LLCs. You go file it with the state. You get a tax ID from the federal government. You have your operating agreement, your minutes, and these other components of the LLC. But you didn't have to file anything to the federal government to say, hey, this is the name of my LLC. This is who owns it. This is who has substantial control in it. There was nothing like that. till now.
Yeah.
So, and this is for you that are setting up new LLCs 2024 moving forward, and everyone that already has one. This is what Mark talking about, the 50 million plus entities out there. You've got to comply with this. I don't care if this is an LLC for a rental property, your small business, your side hustle. You've got to comply with this and file this document to the federal government. Now, it's not rocket science, but it is something you got to get done. We have our company, Main Street Business Services, and our law firm. We filed thousands of these already this year alone for clients. So we can take care of it for you and take it off your plate so you can focus on your business. But we want to break it down so you know the rules on this. But just know there's a resource. If you're like, guys, I don't want to deal with this BS. Let me just run my business or go back to doing my thing and making money. We got you. Reach out to us.
Yeah, I was going to give you that reveal later, but let's get it right out of the gate. Because some of you are like, I'm done listening. Where do I go? So there is a link down below where you can just say, take care of my stuff. Now, a couple thoughts still about what it is that if you don't file this, the penalty is $500 a day and up to 2 years in prison, a $10,000 jail.
It's a misdemeanor,
Yeah. So
still not great.
Yeah, I mean,
prison's worse, but still.
Tomato. But anyway, so yeah.
This is my time after I was a prosecutor, when I was like negotiating, because I was a prosecutor for a year, you're negotiating a plea bargain, and it's like, charged a felon. You're like, so you're going to go down to a misdemeanor, but it's jail, not prison. And if you're a criminal, you're like, that's a good deal. That's a good deal. That's because prison really sucks. There's really hardened people that do bad things there. Jail is kind of like you smoked some weed, you didn't file your POI,
Yeah. Hey, what are you in for? I didn't file a form. What are you in for? I ran over someone, but I'm good.
I robbed some people,
Yeah. Stole his TV.
I didn't file my BOI report. Don't be that guy.
No.
All right.
Yeah. No, not good. No. So this process is now being enforced and must be filed by the end of the year, December 31st. And again, there will be some grace periods here and there, but you don't want to be in that situation. So that is what it is. And let's talk why.
Yeah, let me hit the other due date though, because you said for end of the year, December 31st, 2024 is the deadline for any entities created before January 1st, 2024.
Yeah.
So let's say you set up an entity in March of 2024. Your deadline's already passed. You had 90 days to file the BOI report after you got your articles or certificate with the state for the entity. So, and moving forward, after 2024, it's a 30-day turnaround. So the first year they said, hey, in 2024 for new entities, we're going to give you 90 days to file this thing. Entities before 2024 you set up, you get to the end of the year. And then starting 2025 moving forward, I know I'm throwing out some dates here, it's a 30-day deadline.
And I just remembered something I was going to say too. Some of you may think, well, this is going to get filed with my tax return, right? They have my tax return, so I'm okay. No, it has nothing to do with your tax returns. And many, many, many CPAs, enrolled agents, tax compliance companies, and individuals, they're not filing this for you. There's a legal piece to it where the person filing it on your behalf, they're liable if they screw it up. So we as a law firm have taken this on from day one. We've already been doing company maintenance and maintaining entities. We're going to come to that a little later where this plays a role in that. So don't think it's going to be easy to just have someone do it that you normally work with. You can go out and find companies that'll do it for you, but it's not probably going to be in the wheelhouse of your normal professionals either. It has nothing to do with your taxes. All right, now why is it here? Do you want first stab? Do you want to complain about the law first, or should I say officially bitch about the law, or should I tell you why this is a good thing?
I mean, why is it here? Let me just say, I don't have a good answer for that. I know what they say and what your argument is, and it's reasonable. I just think it's nonsense and BS, and it's kind of a waste of every small business owner's time to do, quite honestly. And I think all this information that we're going to file with the federal government, they're not even going to frickin' use it. So, that being said, you need to do it still. And I liken this back to your tax return. I know you don't love doing that or paying your taxes either, but you know you got to do it. So just get on the freaking compliance boat.
Okay. That's a fair argument. And I'm not a big government guy. You know that. I don't like regulation.
But there was a reason.
There was. Now here's the reason why. Whether they
I'm leaving it for you, by the way. I'm like, I'm not touching it.
3 years ago, when Congress got together and did pass this, it was not a Republican or Democratic thing It was we've got so many bad actors in this country and from other countries coming into the United States, setting up LLCs. Who the hell owns them? We don't know. And doing drug trafficking, money laundering, human trafficking, and ripping people off, hiding behind these LLCs, and the next day it's gone. No one knows where they went or who they were. And it is a major, it's a very useful tool for bad people to hide behind an LLC, coming and going. And the government's like, this is what they thought, the only way we can really get our hands around this is to ask everybody to self-report. We're going to try to find the bad guys by having everyone else please tell us, are you using this LLC? And what are you using it for? And the theory is, at the end of the day, they're going to have a list of all the LLCs that are owned by real people that are really using LLCs and corporations properly, and this big other list of entities that must be owned by bad people, and we're going to start going after them with penalties and jail time and hopefully weed out the use of this structure for bad purposes. That's the theory.
Yeah.
Well, we'll see how it goes. Now, I want to tell you, with all that set aside, this is a good thing. This is a good thing, man. Why do you and I are on alignment.
Yeah. I think even for myself, as I did a self-audit of my entities, I was like, dang, I have a lot more entities than I thought. I was up to like 20 plus entities. And I'm like, I don't remember accumulating that many entities, and it was a good time to clean up. What am I using that one for? Maybe I can do these activities out of this. Oh, I sold a property out of this one. Am I going to use that LLC in that state again? Am I likely to buy there? And so I think it's a good time to kind of relook at your business and corporate structure, do some cleanup. Also, it's
well, we'll come to number two. Yeah. So number one is cleanup, if I may, because I want to add to what you just said.
So, yes.
Yeah, because some of you may be thinking, well, I have some entities I've set up, but I don't use them anymore. So those don't comply here. Maybe not. And here's the thing. Some of you that set up entities and you didn't pay the filing fee with the state, they could have been dissolved. But other states, they may keep it on the books, like Arizona, without a filing fee. They're going to keep it on the books.
Yeah.
So some of you, it's time to clean house. It is time to look at how many entities have you freaking set up over the last 20 years or 10 years or whatever your lifetime as a business owner is. And are they in good standing? What are they being used for? And let's get rid of the ones you don't need. Get this report done for the ones you want to keep. This is a great motivator.
Yeah. So number one would be clean up. Yep. This is the blessing in disguise, is let's kind of clean house. The government's got this new mandate. It's a good time to relook at your structure. Of course, we're helping clients analyze their whole business structure, from their tax and legal planning, asset protection, your state. Is it all coordinated right? Is it efficient? Are you saving on taxes or not? And it's like, we're doing those consults in our law firm at KKS Lawyers all the time. So a lot of our clients have been coming back to us saying, ooh, I need to relook at this. It's been a couple years or a few years, or I haven't really analyzed this yet. Let's get a new fresh look on it, some strategies, and let's do cleanup time right now too.
Yeah, and please, there'll be a link down in the description below too, where we have videos where we talk about the trifecta, building a diagram of your overall structure to build wealth. Great time to clean up. Now, number two, I'll throw this out, is if you have an entity you're keeping around, you should be doing freaking minutes anyway. You should have a corporate book. You should be using this to give you the asset protection of what you need and what you thought you got. One sheet of paper is not an entity that's going to protect you in court or a lawsuit or an insurance claim. I hate to tell you that. And so now, once you clean house, when you do the BOI report, it's a great time to, all right, let me get my minutes done and all this, because I think it just comes down to asset protection.
Yeah, and I think that's being the organized business owner, and also making sure your state renewals are done. You know, a lot of people come to us and they're like, we have our law firm and Main Street Business Service, or we do the company compliance, and they're like, oh, I'm going to close on a property and my entity's defunct. I never knew. Well, duh. Most states want to hear from you every year, and you got to file something that says, hey, I'm still doing business, and here's my $50 or $100. And so we do that renewal process. We're making sure you get your annual minutes done, so you're ensuring asset protection, and we're taking care of your BOI, because not only do you need to file this BOI initially, if you change anything in your business,
even your address
is the owner, you have to update that with FinCEN and file an amended BOI filing.
Or a penalty or jail time again.
Yeah.
This is an ongoing issue. This isn't, I'll be done with it and forget about it. So who's going to maintain this for you? Now, this is the big reveal that we were going to throw out at some point, is that It's terribly expensive. I mean, it's off the chart to do this. We charge $200. Boom. People, this is chump change for a quality business owner that is trying to build wealth. They don't have time for this. We do your minutes, maintain it with the state, get your BOI done, $200. So if you want to tap out of this video right now or this podcast, I'm done. Call Main Street Business Services, check out the link below and say, I've got 3 or 4 entities or whatever, and they'll help answer, should you report this or need to, because we're going to come to, do you need to comply? They'll help answer that, get your minutes done and your BOI all cleaned up, asset protection, boom.
Yeah.
So very affordable and easy to do.
All right, should we dig
Who
into
can get out of this? Yeah.
Yeah, let's get into some nitty gritty, and maybe you can get out of this. I don't know. Let's talk about it. Okay, the first exception I want to hit is...
Oh, no, there's 23.
Okay, yeah.
23 exceptions.
Good clarification. There's
Good luck.
23. The vast majority of them do not apply to you.
Yeah.
They're like, are you a publicly traded company? Are you registered with the SEC?
Are you a bank?
Yeah, it's like these are like big, companies that have freaking corporate legal departments. They don't need to listen to Main Street Business Podcast on this, at least this episode.
Yeah.
Okay. The first one.
Okay. Number 21 of the 23.
On the
list.
On the list is the large company exception. Okay. Now this one kind of pisses me off because basically what this exception says, if you're a big business, don't worry about this. Hey, small business owners, you got to file this. And what's a big business? 20 full-time employees and 5 million or more in gross revenue. And this is you're filing a tax return on this. So the IRS is kind of hearing from you.
And you can't just say I have 20 employees.
Yeah, you got it. It's a both. Okay. You got to hit both of those. But if you do, you don't need to file anything. There's no BOI report required on that entity.
Wow, man, if you tell us how you really feel. But Now, why did they give this exemption? Because if you have 20 full-time employees and you're making 5 mil, you're on their radar anyway. So they're like, we already got you tracked down here at the federal government. If you're a bad person laundering money, we know who you are. So that's the reason for that exemption. 20 more employees, 5 million in sales, both. Okay, number 2 that might allow you to get out of jail, pass go, whatever, some sort of monopoly analogy here, is, which is number 22, is if you're a subsidiary of one of those large operating companies. Now that, I love before the show, you pointed out, that's not the holding company at the top.
Yeah.
It's downstream. So if a company is exempt, any company that one owns is exempt, but not a holding company that owns the exempt one. And that's very common to have a holding company own a bigger operation. That one still got a report. It's just the main company doesn't, and any entities downstream.
Yep. Yeah. And if that was like, I don't understand the difference between a holding company and a subsidiary, this is again
why you call
us. Okay. All right.
Okay. Now to number 23, which is our third possible exemption.
Okay. All right. We got the inactive entity exemption. This one's nice, but this only applies if you had an entity set up before January 1st, 2020 that you no longer use. So if you're like, hey, I had this entity in 2018 I set up and I bought a rental and I don't use it anymore. FinCEN's like, you know what? You don't need to tell us about that one. We're cool with that one because I'm not using it anymore, and I did it before 2020. But let's say it's like, hey, during COVID, I set up a side hustle that I don't use anymore in 2022. Was that still COVID? I think it was.
Well, yeah, it was a tail. It was a tail. 21 for sure.
2021. All right, 2021. But I don't use it anymore. It's inactive. You still got to file.
Yeah. Now, what does use it mean? Because some of you are like, yeah, I set up this entity back in 2020, but I don't use it. What not using it means is it has no bank account, no assets, no income, no tax return. It's literally nothing's been happening since 2020. It's not, oh, I set it up before 2020, but I haven't used it in the last year. No. You set it up before 2020, and it hasn't been used since 2020 in any way, shape, or form. Now, back to the clean house option. Okay, I'm not really using it. Okay, let's kill it. Let's dissolve it. We don't need it anymore. So I don't have to report, right? Matt, new rule from FinCEN in July.
Yeah, this is kind of a bummer.
I'm cleaning house, guys. I'm cleaning house. Give me a way out here.
So FinCEN came out and said, hey, if you dissolve an entity in 2024, but it rolled into any part of 2024, even if this is January 2nd, 2024, and you dissolve it, you still got to file the BOI. Unless you're otherwise exempt. Now, we were thinking, well, the deadline hasn't hit yet, and a lot of lawyers were like, well, we're not going to have our clients file the BOI if we're just going to dissolve it. It's April 2024. They don't have to file it until December 31st. Well, FinCEN had a different thought on this, and they're like, no, you still need to file it.
Okay, now let me give you an example. Some of you are like, okay, so repeat what you're saying first. If you set up an entity before 2020, you have not used it at all, bank account, operations, income, whatever. So we go back to, I have not used it. You can dissolve it, and you do not need to report at all because you meet the inactive status. But if you set it up before 2020 and you kind of have used it and you do plan on dissolving it, and in fact, you do dissolve it this year, you're like, guys, I'm going to clean house. Thank you very much. You still need to report, because you didn't meet the full inactive status.
Yeah.
And even though you dissolved it and it was kind of inactive and you're getting rid of it, you still need to report. So.
Yeah, and I know the logical thing was, but guys, the deadline's not till December 31st, 2024, and I dissolve it in November. I'll just dissolve it right now. Why would I have to file that? Well, logic is not what FinCEN's going for here. Okay. That's not
when did you think the government made sense? Yeah. No. What are you smoking, people?
So, but I think still a good time if you're in that scenario. Dissolve it. Let's just get rid of those entities you're not using. If you have no intent to use in the future, but still got to file the BOI.
Yeah. Now, we've got articles on this and whatever. If you want to read the other 23 exemptions. One that's interesting is accounting firms get out of this. Reason being is if you're an accounting firm, the IRS knows who the hell you are anyway, and they've got all your information, whether you have 20 employees or not. And tax-exempt entities. So if you have a nonprofit or something like that, that would be number 19. So there's a few in there. If you want to look at that, check on one of the links below. Now, so let's say you need to report. We're into the show here, straightforward. How do you do this? Again, we've told you one easy way. Just give Main Street Business Services a call. But if you want to do this, it's really not that painful.
Yeah.
You can go on the FinCEN website.
Yeah, fincen.gov/BOI is where you can go, and you can do it on your own. Now, here's what they want to know, though.
Yeah, here's what you got to have ready to go.
Yeah,
yes.
They want to know who owns 25% or more of the company or has substantial control. Substantial control, think of like the manager of the LLC, an officer in a corporation, president, treasurer, whoever. Those are people who have substantial control. So these people have to be listed on this BOI report to say, hey, it's XYZ Enterprises, it's like Vandalay Industries, LLC, and Art Vandalay manager, whatever. Yeah. George Costanza, 100% beneficial owner. And so those things have to be on the filing. And that's why they want the disclosure and the money laundering stuff Mark's talking about. It's like, we want to know who's really behind this entity.
Yeah. Now, this is where it gets dicey too. Oh, well, we'll come back to grandma who's not a manager but owns it, or son that's a manager but doesn't own it. They would both need to report, because whoever controls it, even if they're not an owner, or if you own 25% or more, even if you're sitting on an island somewhere or you're 92 years old. Owners and managers. That would be an LLC, officers and shareholders of the corporation. Now, well, Mark, what do they want to know? They want to know your street address, and you have to provide a passport or a driver's license, essentially.
Yeah, and that's this has been the hard thing with a lot of our clients to get them to comply is we need your freaking ID. We need a government-issued photo ID. Generally, when you're setting up an entity, you don't need that, right? So we never requested it for clients until 2024. And so we need your freaking ID. And like Mark said, it could be passport or driver's license. Now, the one interesting thing that you do not provide is the social security number. A lot of people thought, why don't they just ask for my social? Well, they didn't. They want your name, your address. Are you an owner, substantial control? What do you have? And then they want a government-issued ID.
And that address has to be on the ID. This is not where I can use P.O. Box. Oh, no, the address does not have to be.
It doesn't have to be. You can, because you can, it does not have to match.
Okay, but you can't use a P.O. Box.
But you cannot have a P.O. Box.
Yeah.
So you have to list a physical address for yourself with the on the BOI form. But as Mark said earlier, this is private. We have a lot of clients that have used our privacy address service, for example, where we have our Utah office address that's on your state filing, so your public address isn't there. You might use our registered agent service. Your business address isn't even anywhere on your filing. But those are public-facing records. And so you can get away with that in some states, I should say. But this BOI filing, it's a private record. Like even state agencies don't have access to this unless they subpoena the federal government. Yeah. So this is not a publicly searchable thing. So your address will go to the federal government, your actual street home address, but it's supposed to be private.
Yeah, and let me give an example again. Oh, well, I use XYZ company, or even you guys as a law firm. Yeah. I'll use your registered agent address, or I'll use your law firm address, because that's a street address. I can put that on there. No, you cannot. And they say it has to be your residence address, not your office address. Well, I'll just put my office address down on all of these. Nope. It's got to be your home. Now, you may say, well, they're not going to know. If you lie on the BOI, it is non-compliance, $500 a day penalty, and jail time. So this is penalties of perjury stuff. So you've got to list your home address. And for some of you that are playing games with state taxation, some of you playing games with privacy and hiding out, and, oh, I'm in an RV and I travel around the country. Well, you better freaking find your, we talk to RV owners all the time and saying you have to choose a home address somewhere, even if you're on the open road. So this is not something you can play games with either. This is the place not to do it.
Yeah. I mean, what if you're that guy, though, that lives in a van down by the river? What address do you put down?
Well, and
what is that character, by the way?
Okay, that's Chris Farley.
But what's the character's name?
He's the motivational speaker.
Yeah, I'm so what was motivational speaker.
Yeah.
Anyways.
Yeah. So, well, this is what we tell RV owners too, is that, and there's a lot. We love our RV community that are hitting the open road, and they're going to have to choose some state as domicile. But if you are truly living like a nomad, and no offense, that could be a wonderful, liberating thing. Jack Reacher, I'm signing up right now. But choose your mom's home address, choose your dad's home address, choose someone, a friend or family member, and say, hey, I live in a van, but for this year, can I use your home address for mailing with the federal government? So that would be my suggestion there. Okay, so you got to provide your driver's license, your home address. Now, some people will say, well, I have a trust. A trust owns my LLC, or I have an LLC that owns the LLC. You have to look through whatever entity or trust that owns your entity and say, who's the beneficial owner? Well, it's my trust and I'm married. Okay, well, you're going to put both of you as owners on that report, even though your names are not as members or not as managers or whatever. So I hate to tell you this, the easiest way to answer this is don't play any games. Who the hell owns it? Who the hell controls it? Put it on the damn report. Just try not to play games here. I don't know what to say.
And if you list like trust or LLC on one of these things, if they want an individual name, that's the whole purpose of this. If it's like what do they call those Russian dolls, whatever, that like keep stacking and stacking. They want to get to the last one. Okay, they don't want all these little shells.
That's a great example.
Yeah. That was actually in the statute itself.
Oh, that's right.
It wasn't like the preface of the statute that there's like, we don't know who the hell owns these things, so we're going to make you get to the real end here to say there is a person that owns this thing at the end of the day, which is the true beneficial owner at the end of the day. For those of you with IRA LLCs too, and you're like, well, my IRA owns the LLC. Do I list the IRA? FinCEN answered this. They said if there's a trust company or custodial entity like an IRA in the middle, you say, who's the beneficiary of that IRA? Well, you are. So you don't list your IRA, you list yourself.
And this is why there's an exemption for nonprofits, because no one can own a nonprofit. And if you apply for a nonprofit, you disclose all the people that are board members or officers. So they have the information already. So anyway, there are a lot of nuances here. So again, if you want to knock yourself out, you engineers out there, I love you, and research the hell out of this on Google and try to find the answer you want, or go play on the FinCEN website and look at their FAQs that go on and on. Knock yourself out. Or pay a couple $100, hang your hat with us. We are taking that responsibility for you in an engagement letter so you know it's done right.
Yeah.
So just, that's why I think any of you that have any unique little situation where questions start to arise, you are now wasting your time to figure out on your own. Some of you, it's a slam dunk. I get that.
Yeah.
But
yeah, and the next thing that's important on this, that's called the reporting company. So any entity that has to file a BOI is called a reporting company under the rules. And as you're looking at the forms, that's what that means. But there's another thing that's important you're going to see here. This caused some confusion. There's something called the company applicant. So when you file a BOI, in some instances, and I'm going to explain when, you have to list who is the company applicant that set up the LLC, which could include the lawyer or even paralegal. And so this is the person that filed it with the state. Now, when we set up a new LLC, and for any entity or corporation set up January 1st, 2024 or later, on the BOI, you must list the company applicant, okay? But for prior year BOIs, your entity you set up in 2015, in 2021, whatever, they've said, just file the BOI. We don't care who the hell the company applicant was. Don't put that on the BOI report. You don't have to go back and be like, who was the lawyer that set this up? I don't remember. And so, so just know there's a little confusion on that. When do I need to report the company applicant that actually set it up with the state?